Welcome to the Daily Business and Finance Show. Tesla's self-driving ambitions amid job cuts, Neuralink's brain implant glitch, Medical Properties Trust faces stock slump after Q1 earnings miss, BP eyes Tesla supercharging sites for U.S. growth, Energy Transfer predicts more midstream M&A activity, Main Street Capital unveils Q1 results, DOJ launches healthcare antitrust task force, and Warner Bros. Discovery bounces back with new Lord of the Rings movie. Stay tuned after this short ad break to delve deeper into these headlines. Reports suggest that Tesla is speeding up job reductions in various departments at its Shanghai Gigafactory, hinting at a possible hiring freeze. This development comes after the exit of top executive Rich Otto, who expressed concerns about the layoff's effect on company morale. In other news, CEO Elon Musk has been discussing forthcoming enhancements to Tesla's full self-driving or FSD system amidst ongoing probes into potential wire and securities fraud linked to the firm's autonomous driving assertions. Currently, Tesla shares have seen a decline of over 30% this year.
Elon Musk's company, Neuralink, has recently reported a malfunction in its brain-computer implant. This incident occurred weeks after the device was installed in an accident victim named Nolan Arbaugh. The installation was part of a study approved by the FDA. The defect involved threads coming loose from the device, which impacted its speed and accuracy. However, corrective measures have been taken to improve the performance of the device.
The stock of Medical Properties Trust experienced a decline of 8.7% due to Q1 earnings and revenue that were lower than expected. This situation arose after Steward Healthcare System, the trust's biggest tenant, declared bankruptcy. The Healthcare Real Estate Investment Trust disclosed a net loss amounting to $1.23 per share, while total revenue fell below analyst predictions, reaching only $271.3 million.
BP's unit dedicated to electric vehicle charging, known as BP Pulse Americas, has outlined plans to invest a staggering $1 billion by the year 2030. This investment is aimed at expanding its network throughout the United States. Part of this expansion strategy includes acquiring sites of Tesla's superchargers along with their workforce. This move comes in the wake of Tesla's decision to decelerate the expansion of its own EV charging network. BP has set an ambitious goal for itself. It aims to install more than 3,000 charging points within the coming few years.
Energy Transfer is anticipating a draft environmental impact statement for its Blue Marlin offshore terminal within this quarter. The licensing for this project is expected to be granted within the next year. Despite the first quarter earnings not meeting the estimated figures, there was an increase in adjusted EBITDA, which rose to $3.88 billion. Furthermore, due to new projects and acquisitions, the full-year outlook has been increased to between $15 and $15.3 billion. There was also a significant surge in oil volumes by 44% in the first quarter as a result of acquisitions and stronger Gulf Coast refinery utilization.
Main Street Capital has announced its Q1 distributable net investment income per share to be $1.11. The total investment income has seen a rise of 9.4% year-on-year, amounting to $131.6 million. There was an increase in net assets by $107.1 million, and a return on equity of 17.2% was recorded for the quarter, with a trailing 12-month period at 19.3%. The company's net asset value currently stands at $29.54 per share.
The United States Department of Justice has established a task force to address antitrust issues within the healthcare sector. This group, known as the Antitrust Division's Task Force on Healthcare Monopolies and Collusion, will steer enforcement strategy, policy advocacy, and conduct investigations. The task force will be under the leadership of experienced prosecutor Katrina Rouse, with a primary goal to pinpoint antitrust problems in healthcare markets.
Warner Bros. Discovery is in the process of creating a fresh series of Lord of the Rings films, with anticipation for the first release in 2026. Even though it fell short on revenue and EBITDA projections, the company's performance in the first quarter was strengthened by robust free cash flow. The corporation continues to hold confidence in achieving its earnings goals for 2025, and its package deal with Netflix and Verizon is surpassing expectations.
And that's a wrap on the Daily Business and Finance Show. Keep investing in your knowledge, stay financially savvy, and we'll catch you in the next episode. Farewell. I'm Montgomery Jones.
And I'm Amalia Dupre. Until tomorrow, stay safe and farewell for now. This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.